This conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 10:08 a.m. on a rainy Sunday morning on October 27, 2019. This is part of this. This is a continuation of the ACS Advanced Coaching Sessions for ACS students who have subscribed to the Advanced Coaching Session program. We do have a new member. Welcome, Paul, who is going to be sitting in to get a little bit of an idea on these training classes, which Jen, one of our members for the last couple of months, has been working through. And welcome. Session will be recorded, uploaded to the Google YouTube channel at some point for others to view, but these being paid ACS sessions, they will most likely, under our guidelines on our service, given that people have paid to sit into ACS sessions, will remain on a private folder that can be accessed by the students themselves. On that note, let us begin. Full disclosure, this is purely for financial education and not for any solicitation or advice. So, all right. So, as both of you have visual and audio connection, so that's good. And if you have any questions, feel free to ask directly or type into the box, and we'll try to keep this within the 60-minute allotment for these sessions, but I always seem to go a little bit beyond that. So to start off, what I'm going to do today is show you guys a series of actual real-time charts that I published for the benefit of all my members. I would say a good 90% of them were serious money makers. And the reason I'm going to go through the charts one after another, because this was one of those very rare weeks, not that the market basically hit a new high, that I've been talking about for a while, where we had a confluence of almost every single technical pattern that I teach very in detail come into play. There was also a confluence of day trades, swing trades, high beta, fast moving momentum, intraday reversal trades, earnings plays where you overnight pop or drop. We got a lot of pops. And so it was really a full library of everything that we focus in as we try to become unemotional tactical traders, because that's our mission statement here at Crusade Trading, come into play. So it was really great to see that. It doesn't always happen that within a week or 2 weeks, and this past week alone, that all these things come into play in different forms in different stocks at the same time. Doesn't always happen. It's very interesting to see that. So, Paul, can you I know you can hear me, but can you say something?
Yeah, I'm here now. Can you hear me?
Oh, there you go. No, that's great.
Great.
That's great. All right. So what I was saying was we're going to go through a barrage of charts for Paul. He's he's joined us just this week. I know you've been kind of following me on StockTwits. People follow me on StockTwits. People follow me on Instagram. Those are the two sort of outlets people get a chance to see a little bit of what we do here at Clueless Aid Trading. And then, of course, if they wish to, they join. And I hope that your stay with us will be a very successful one.
Yes.
Yeah, there you go. It's early in the game. Now, you do get two complimentary sessions, this being the first one. The second one that I'm going to work with you is going to be more on a one-to-one basis where, sort of go through more details. This is more of a technical picture. All right. So talking about pulling up the chart folder here, lots of them. So this basically last week. So let's start off last week from earlier this month. So 21st. Yeah, so this last week. So let's start off with Monday, from Monday, and we're going to work backwards. So here we go. This Monday started off with this chart, which had started off at the first week of the month, but let's look at that. So here we have a very clear-cut depiction. One second. Move this out of the screen. So every morning before the market starts, I put out the charts on the S&P 500. I put out the charts primarily on the E-minis. So people have a general, not general, a very specific visual roadmap as to what might happen during that day. And I set it up to the best of my abilities and these charts don't change rapidly, because one of the things we don't do here at Clueless Safe Trading, what Jen knows, and Paul, you'll find out, we're not after the fact kind of people. It's not like the charts are constructed after the fact and say, wow, look at that. These are constructed weeks ago, in many cases days ago, and of course updated and refined as we move along. But they don't dramatically change, meaning like I don't just all of a sudden change all the structure and to fit the market. So these are shown, and if you track these things, doesn't matter whether you're buying long-term, short-term, intraday, which is obviously a lot more volatile, these will help you, period. Doesn't matter what type of trading you do. And this goes back to the 10th of October, because I couldn't fit it in the screen, because if I keep on squeezing in, this is a 15-minute ES15, 15-minute candle chart, that is going to get really messy. So here, all clean cut. You have a range. You have a possible range breakout, which I depict by these arrows, which is exactly what happened. We broke out over this. We have dotted lines are depicted, meant that back here somewhere in the past couple of days, we have a gap fill. So that's the reason we have this dotted line. These are shaded boxes are also gaps back here, pushing back, and then you have the range. So very clean cut. You with me so far, Jen? I think we have another new member who joined us. Hey, Sanat, are you connected?
Yes, connected, but
okay, good. So just here as I move along. So all right. So next chart. So so the helpful thing for anybody is in the morning when I put out these first thing in the morning, you'll see a series of 3 or 4 charts that'll hit the real-time Twitter feed, and they all have to do with the market in the form of E-minis, the futures, or the SPY, but primarily the E-minis because they are the dynamic ones, right? They're moving all the time. And SPX and stuff don't start moving till the market starts, right? So does SPYs. So there we go. Let's move on to the next one. And this, what we're doing, I think you just joined us, Sai, is we're just basically going through every single chart, at least on this side of the picture, on one of my computers, since Monday. So you have an idea, what we did. All right, next one, I believe, is a chart of, no, that's not on my thing. That's the VIX. That's a killer chart. So the next one that I put out there at 10:22 on Monday was Boeing. And Boeing, as the week progressed, actually went up towards the I don't remember exactly, but towards, it basically did pretty much what we said it's going to do. It hasn't reached that level yet, but it went up a good solid 335, 342. Very nice move. So this is another chart where you have the Fibonacci retracements, which I have explained to all my ACS training students, are used when things drop rapidly or move very rapidly higher. You can place the Fibonacci retracement levels and see what the mathematical probability is for that stock to bounce. So if something fell, in the case of Boeing, from 375 from a couple of days ago down to 345, I'm sorry, down to 324, you can have a visual projection as you enter the trade that these are the levels the stock's going to hit as it attempts to bounce higher. So this is a clear-cut, clean-looking chart, and most of the times, market conditions remaining kind of good, you will get each of these price targets hit. Now, whether or not it's going to bounce $50 to and all the way to what we call pattern completion to 375, that is more of a difficult forecast. So as a trader, I'm looking at the first level, 336, 344, and the 50 fib, we call it fib 50 or 50% Fibonacci level, is something that a lot of stocks, markets too, tend to gravitate towards after a large drop. Remember that. And you'll see it happen over and over again. And I've seen it happen for more than 12 years. Okay? That these Fibonacci levels, especially on large drops, and you can draw, if something moves up a lot too, you can draw a Fibonacci. You can put the Fibonacci levels on top and see how far it will pull back. I've used that on Roku in the past 3 weeks and made some serious money. So that's what the next chart looked like. 10:36 a.m. last Monday, I show you a terrific swing. In other words, a bigger picture of what the markets are about to do, which is the S&P 500 daily chart. And I can see, at least from a technical standpoint, that the market, based on the underlying moving averages, the full stochastic indicators, the McClellan oscillator, the MACD, that everything was a go. In other words, the market were going to go higher. That's what it looked to me, and I was right. Because nothing in this picture, just so you all know, nothing in this picture indicated, and by the way, anything can happen in the market. We know that. There could be a tweet out of President Trump. It could be a comment out of the Chinese Commerce Ministry. It could be anything where the market can drop 300, 400, 500 points, within minutes. We've seen that. We've gone through it. Nothing new. But I'm talking about the general pattern on the overall market. So this was the time of that intense 600-point volatility, which lasted through August. And now we have a W dragon bullish pattern attempting to break out, at least retest the old highs. That's exactly what we did. Break out a little bit, which is exactly what we did. We went to 30.27. And these type of charts, as I explained, these type of predictive roadmaps or GPS navigation systems like you have in your cars were put out early in the week, not after the fact on Friday. So make use of these things, because this is what's going to keep you in a trade, not let you freak out, even though you might be having a bad morning because the market opened down. And you're wondering, like, oh my God, what am I going to do next? And keep in mind, as technical traders here at Clueless Day Trading, we don't just buy every dip. You know what they say, BTFD, buy the F dip? Well, that's like baby stuff. What do you mean buy the F dip? You could have a dip that can go longer and lower than you could expect. All these parameters have to fit before we go in aggressively and buy these type of massive long tail hammer reversals. So you don't just go and buy the dip. You buy the technical dip based on the structures drawn on the charts. So anyway, so this predictive chart was dead right. We went up there and we still have room to go up. And that's what I've been, guiding people to. Like I said, we, based on this diagonal and rising wedge, as we call it, we can move to 30.50, slightly higher, and possibly 30.70. So make use of these charts, guys. I don't care what stock you're in, whatever. If you don't have a mental framework as to which way the market is heading, because remember, none of us, and primarily none of you, really know what the market's going to do on a daily basis. I don't, but I do have an idea where the markets can crack, what the general sentiment in the market is, which is total fear. Even bulls are scared. You think the longs who are long the market are totally comfortable every day? Are they putting in and deploying large? Are they playing offense? No, they're not. I'm not playing offense, and I'm kicking butt. And many of my members are kicking butt. But I'm not playing offense. I'm not putting in 70% of my trading capital directly in the market in all those great killer trades. No. I'm still playing defense where I'm putting moderate amounts and catching each of these explosive waves higher. So if bulls like us, technical bulls, based on what we see, we are technical bulls here, are not playing offense, what do you think the neutral, so-called neutral guys sitting on the sidelines, which neutral basically means bearish, and the bears who are trying to constantly short the market and getting killed, what they're doing? Think about that for a minute. And all this relates to whether you're going to make money in the market or not. Next chart is SHOP. This is a daily chart, so it doesn't show the intraday back and forth. This is a highly volatile stock, as you know, very powerful stock. I think their earnings is going to blow out the lowered earnings estimate, and I think the stock is good for 346, which is at least a retest, and the neckline, if you want to look at it that way, off there. It's basically a W formation. If it slips, the stock's going to go to 280. Do I think they're going to miss that much? I don't know. But I think the company is in such solid footing, and this fact that the stock has come down from 400 down to these levels, we played this bounce, and now we have a second pattern developing. If you want to look at it, what pattern is this, Jen? Sorry, 1 second. And this is for swing traders. This pattern, I'm not talking about the bigger. This was a falling wedge that we caught pretty much at this level, where the stock bounced up almost 40 points in one day, right there. Then it moved sideways. So this pattern here is what? What is this pattern, Jen?
Inverse head and shoulder.
No.
No, I'm sorry. Head and shoulder.
Thank you. Exactly. So this is your head. This is your left shoulder, your right shoulder, and that is this pattern here. So bottom line is, from a swing perspective, you can trade, and this is something very important for all you traders to understand. You don't always have to look at the big picture and say, oh, I'm going to wait for the perfect time, because the machines are constantly changing your perspective. There are no perfect times. The perfect times are here. Those are the perfect times, the perfect moments. And nobody really reacts to those moments because they're so terrified and they're sitting in that bunker that they're going to be shot down or sniper attacked by algorithmic high frequency trading programs. But anyway, so being a head and shoulder, you can play even in, this is a bearish pattern. So this pattern is still bearish. Even though the longer term pattern is starting to look bullish, there's lots of different formations playing. Indicators are suggesting that the so-called smart, intelligent money has been accumulating the stock all the way from 280, 300. But you can, as a trader, you can trade these moves within the framework of this bearish pattern. And each of these moves are good for about 10 points. And as traders, we can get 60, 70, 80% on each of these fast moves that can last a couple of hours, if not a day or two. This one was a larger one. This one was a 30-point move. So you can play that, even though the pattern is still bearish. You with me so far, Sai and Paul?
Yes.
Yes.
Okay, good. Okay, I'm just keeping it simple, that there are lots of opportunities. There are always opportunities in the market. It's how you react to it, how you deal with it, what your time commitment is, and what your mental framework is. That's all, to be honest with you. I'm not asking people to do anything. I'm not telling people that they should trade every day. You can sit on a swing setup and let the market take it higher. We have multiple swing trades like that, still moving slowly but surely higher. And the calls are up 300, 400, 500%. GameStop is a prime example. The stock itself is up 35% from the time that I asked people to buy it. That's just stock. Forget about the options. So bottom line is that you can still trade within the framework of these bearish patterns. And so the key thing that I wanted to bring out, like this is the left shoulder. This is the right shoulder. This is the neckline there. You break the neckline, it's going to automatically push down quickly but surely back, to the next level of support. This is your head. So what I'm getting at, that in order for this stock, Shopify, which is a very powerful company, Canadian, like Paul. Is Shopify ultimate e-commerce platform for small businesses and medium-sized businesses? If you don't know, Shopify created the whole concept, almost the whole concept. Or Yahoo actually created with Yahoo stores, which never really took off. You could set up a electronic e-commerce storefront to sell your goods. So Shopify really took it to the next stage. Serious company, the Amazon of Canada. So bottom line is that in order for this bearish pattern to be, and I'm going to ask this question to any of you, but I'm primarily Jen because she understands a little bit more about technical patterns and learning fast. In order for this bearish pattern to turn into a bullish pattern, what has to happen, Jen? This is a bearish head and shoulder, head, left shoulder, right shoulder. In order for this pattern to be negated or just, I don't have another word, negated, in other words, demolished, and it becomes it becomes a bullish pattern, what has to happen? Look at this. I know you know the answer, and anyone can volunteer with the answer.
I think it should
go ahead. What?
Right shoulder. It
Yes,
should
no,
the next thing should be it should cross the right shoulder and then it will be bullish.
Yes, exactly. It has to bust through the right shoulder. My opinion is it will. We're gonna look at the chart in a second. It has to bust through the right shoulder with force, not like heavy volume, $15 up type of thing. And that's when the right shoulder buckles, it negates it, and it goes higher, and then the head becomes the upper end support, and that upper end support is at 346, which also happens to be the 50-day moving average. Everything falls into place. Absolutely correct. Jen, did you understand what Sai said?
Yes, I did.
Yeah, I mean, I know you know the answer. You just probably didn't, So here
No, I
it is.
actually have it written down from your last ACS.
Yeah, it's very simple. It's very simple. It has to break out over this, because then the pattern is not that, it's flipping the birdie pattern anymore. Then it becomes a W pattern. You got it? Because it came from here. So all of a sudden it becomes a W pattern. So this right shoulder has to be, this is not difficult. And you guys should know this instinctively. So when I'm showing this chart and I'm showing you where the right shoulder is, which is pretty much at this level here, which is around 3, the stock did go there because this was, and you know that it has to break out to form a W. So let me clean this chart up. So this, the reason I'm spending a few more minutes to explain Shopify, because this is a tremendously explosive stock. So if you catch it at the right time, which I think realistically is close to the right time, the real right time was down here, 290. We got it around 300 and the stock exploded. For a day or two, we traded this thing like monster. I didn't hold it all the way up. I just traded it. This being a very fast moving volatile stock, like the Roku type, you need to take your profits fast and feel great about it, and then look to see where you can get in. Because all of a sudden it can turn and be down 16 points, 17 points for no reason other than the NASDAQ was down. So they give you a lot of opportunity. I love trading this stock. I traded day, I traded swing. Options are not crazy expensive. They're not crazy cheap either, but they're not Amazon type of expensive. And it really moves. So this is a downtrend line. Ladies and gentlemen, this nice fat red line is a downtrend line. That downtrend line is also pretty much a breakout over the downtrend line is your right shoulder at 330.94, 331. So for it to go from 331, $15 to the 50-day moving average, 346, which it'll meet heavy resistance, and it'll meet massive resistance at 360. So my gut tells me the most stock can go to 360. That means you're rich on those options. Where it's going to be the next point of sell-off. And so if you look at my charts that were drawn days ago, if not weeks ago, every one of these lines is where the stock is going to get hit. And if it slips, 298, 280, which will be hands-on buy, unless the company completely does something really stupid. So this is a huge moneymaker, guys. And I know what the structure is because I'm delivering it to my people. Okay? Let's move on. Any questions on this? Jen, this one stock alone can take your account up 40% based on past experience. All right? I'm talking about any of you. Your trading account can go up 40 to 50%, and I'm not saying put your whole money in it, like a small portion of money can still move your trading account realistically between 30 to 50% by putting a small amount of money in Shopify prior to earnings. All right, guess no questions. Let's move on to the next one. So what I'm doing with these charts are I'm going through the sequence of, at least on one of my trading PCs, what I have stored on my chart folders, sequence in time. So then this is the 21st, 11:29 a.m. I show a very clear-cut picture of the roadmap for my members, that this is what the market's going to do. This is the 1-hour chart. It cuts out the noise of the 15-minute chart. Now, let me ask you, because I've been speaking. When you look at this, is it difficult? And one person at a time. Is it difficult or easy to understand with all the markers and stuff that I have in there? I start with Sai.
I didn't get your question properly.
Okay, my question is, when you look at this type of roadmap, right? This is a roadmap of the market, S&P, E-mini futures, S&P 500 1-hour chart, E-mini 1 hour. Is it difficult to understand this chart as to the general direction of the market and what can happen, or is it easy for you when you see it?
I'm not sure how the complete chart works. So until unless I know what pattern it is,
Okay,
I'm not
so
sure.
let me stop you for a second. When you forget technicals for a second, when your brain looks at this chart, within the
Yes.
first 1 second, does it look like it's going higher or lower?
Uh,
You don't have
it
to
is
think.
at the
You can
topest.
give it,
Uh,
huh?
we, it is
Go
at
ahead.
the maybe yeah with the resistance line. I see it. It can go up.
So your first instinct when your eyes put or look at the chart, the first answer it looks like the uptrend is still intact, correct?
Yes.
And I'm not feeding you answers. I just want to know what your brain sees quickly, like fast. Like when you look at this, your first instinct is it looks higher or lower.
Higher.
Okay, Paul.
Yep.
So generally speaking, when you, because I know you just started looking at my charts, I know you follow me on StockTwits, and that's how you joined us, and you've seen some of my work there. But I don't post that much there anymore. Don't have time. Overall, directional bias on this looks higher or lower?
We can see like towards the left side of the screen, there's lower highs.
1 second.
But
Left
then,
side of the screen. No, I'm
well, I
talking.
mean, like towards the top red arrows, there's lower highs, but then eventually on the right side, it becomes higher than the
Oh, you're talking about lower highs here.
like right at the top. Like, sorry, around
I'll
the
give you.
6th.
Are you around
Around
where?
sorry, around the 12th of September. That's where the high is, and then it's a lower high.
Here. You're talking about the 12th of September here. Okay, okay.
Yeah,
No, what I'm with you see, you're complicating matters. The simple question is, from a visual perspective,
yeah,
I want you to focus on this part here. Okay, I see every single pattern here. I mean, because I do this and I'm the one producing the content, and many of my members, know that too. That's a massive W pattern, massive with a quadruple bottom. It's like the
yeah,
ultimate buy signal ever.
yeah,
And then the market just took off 700 points. And
yeah,
now it's basically created you can look at it as a cup and handle. These are
mm,
quick cup and handles. Each of these are consolidation channels that everyone freaks out on. We don't. As long as the support level holds, which is this line here, 29.71, that's why I have the arrow here. This pattern is
yeah,
nothing but a very bullish, and you can draw from here or you can draw from here. It is a very large cup and handle. You see that, guys? So as
yeah,
long as this trading range holds, which is a trading range worth about 200 to 230 points, as long as this holds, this market will bust a move higher, which I was dead right. It did bust a move higher, and we went up here on Friday. Okay, so that's and it's almost a pattern completion is almost done, at least on a short-term basis, with maybe another 100 or 200 points left before the market has a sizable correction. So that's what this chart is trying to tell people. And from a predictive nature, it makes us a lot of money. So we keep an eye on that. So Jen, so Paul, different ways of looking at it. Primarily, when you see these charts, when I put them out, they are a proxy on the market. So you have a quick visual. All our members are always informed about what's going on. And these charts are a quick way of checking in and saying, okay, I see what's going on. So regardless of whether the market is down 100 points or 150 points or 200 points, these charts keep you in the game because you know what is actually happening, not just the price movements. Just watching price movements can drive traders nuts, and that's why I would say 99% of retail traders still following the old-fashioned way of chasing prices up and down. They get clobbered in the market. They get clobbered because they don't have a visual representation of what is going on. Am I clear on that? Yep. Everyone understood?
yes,
Jen, did you understand what I said?
Yes, I did.
Okay, so this is the part that I said on Monday, Tuesday of this week, after the big move higher, then the consolidation down. These are movements that are going to happen repeatedly because the machines are going to short and buy and go long. And so you get the zigzags. And each of these zigzags worth a lot of money. And by Friday, we had broken out to what I said we would go to. We didn't get there yet, but we got here. So the more you look at these charts, trust me, and your own stuff, the more you're going to make money. That's a given. Let's look at the next one. This is the daily. That was the hourly. This is the daily. Now, this is a very defined pattern. Very defined pattern. And these are massive moves. These are hundreds of points. All right, on the Dow Jones Industrial Average. And this is for people who are swing traders, who are wondering where we can go. Well, I told you guys where we're going to go. We're going to go here, and that's exactly where we landed up on Friday. And this chart was posted on the 21st, which was, what day was the 21st? 21st was Monday. Yeah, Monday. So you had your GPS roadmap. Now, what is this pattern, Jen? It's very defined. So please, don't take too long to answer because you know the answer. Jen, I asked you a question.
Inverse head and shoulders.
It's an inverse head and shoulder. It's more, absolutely. And it's also a cup and handle.
Mm-hmm.
It's a very much a cup and handle. There's your handle. Moving sideways, a couple of 100 points. And then it broke out. So again, these are daily charts for people who are sitting in cash, people who are looking to see where the market might go or where their buy points could be. Use these charts. These are the daily. These are not for day traders. These are for swing traders. Through this massive turbulence in the month of August, and once we broke out of this range, then we came back and retested. So these are good money makers. Next one is a stock chart of a stock that we've been making some money on. We made good money on it from the bottom, but now it's kind of moving. It is on the cusp, in my opinion, of a killer breakout. Back in August on the last earnings, the stock went from 85 to 112 overnight. That's a mover, baby. From 90 to 112. It was up $22. Big payday. Guidant Health. Look it up. Look up the company. Serious company. So when I look at a chart like this, it excites me. A real biotech company, serious prospects, and it's allowing me to buy it cheap. I would be a dumb F if I didn't. And I'm telling you guys to buy this. I've said it for weeks now. Their patterns are, this is the daily chart. The patterns are so definable. Now, it doesn't mean that they could miss earnings and they can come down to 55. I'll buy it as long as there is nothing majorly wrong with my with the long-term technical chart. All the indicators are a go. So this is like money in your pocket. Now, if you're looking to make money on it every day, this is not really a day trading stock. It's a swing trading stock. You have to hold it for a couple of weeks, at least a week, 10 days, 2 weeks, a month. I like buying the monthly on this. So everything, this is the level I believe the stock will go to. And GH close, it's at 69. It's here now, right there. It closed at 68.70 on Friday. So let's talk technicals. What is this? What are these two lines? Jen?
Yes.
No, yes is not the question I asked you. I said, what are these two
No,
lines?
I didn't hear the question.
Oh, the question is, what are these two lines?
Sorry.
These magenta lines, these two.
So downtrend lines?
It's a downtrend channel. This is the downtrend
Yes,
line, correct?
downtrend channel.
So it's a downtrend channel. So when you look at a chart like this instinctively, and this is certainly a bullish pattern. What pattern is this that the stock is following?
I'm sorry, say that again.
Okay, what pattern is this right now that the stock is following? I just drew it out for you, Jen. It's a W.
A W, yeah.
And what is a W pattern? Write it down again.
Sorry, Frank, I'm having trouble with my mic. I'm having trouble with the mic. I only hear half the question.
Okay, this W pattern is known as what? Jen, are you there?
Yes. Yes.
Okay, the W pattern is known as what?
A double bottom?
Yeah, it is part of that is a double bottom, but what's the technical term for the W pattern? Okay, we're not going to waste time. Dragon bullish, write it down, please. Please write it down. A dragon bullish pattern for swing traders is money in your pocket. If people don't buy dragon bullish patterns with bullish candles, they're stupid. That's all I got to say. Now, I could be stupid because the stock could break down and go to 57, but I've been less stupid than other people who just sat around and never bought these massive movements, which is on the cusp of about to happen. So it doesn't matter that you didn't buy it, that people didn't buy the double bottom. Okay. Now, on top of that, the W pattern has something called a neckline, correct? So this is the neckline, and it's breaking out over the neckline. So the next level the stock will go to is 75. This is money in your pocket, all of you. We're just giving you guys. So don't just let the market take it away. Eat it. While you sit there saying, oh, I didn't make it, so what? Well, what you didn't make is what you lost. So, Jen, show this is a downtrend channel. What's the upper end of the channel? Even within that big downtrend, multi-month downtrend, what is the upper end of the channel? Paul? Sai?
74.
Yeah, 74, 70, 75, right there, 75. So good. So you got 9 points. I mean, sorry, 7 points you can make on the stock, even within the context of a downtrend channel. And if it breaks out over that with a bullish engulfing bar, which is a fat green candle, then where is the 50-day moving? Where is the 50-day moving average, Jen?
I didn't hear the question, Frank. Say it again.
Okay. Where is the 50-day moving average?
It's your red line, which.
Give me the number. You're looking at a screen. Correct. So if it breaks out over the downtrend channel, the stock is going to attack the 78 and hit and go towards the gap. Go towards, it's actually not a gap. This is more of a, there was a gap back here. So it will hit that 80, 85. That's why I have these visually gorgeous, just kidding, yellow boxes. You got it? Are you guys with me? Paul, Sai, Jen?
Yes.
Jen, are you connected or are you having problems again with your mic?
Yeah, I'm having problems. I'm like in and out.
All right, but I hear you loud and clear. All right, let's move on. So this is a terrific looking chart. This is for people who are swing traders who don't have time to manage their trades during the day. This is the type of company you want to buy. And on top of that, this baby is probably going to get bought out, in my opinion, because they're very specialized. And buyout means I'm going to hold those calls. You can buy them December, January, February. You know, you can buy time. Buy 1 or 2 calls. Then you wake up in the morning and your freaking account is up 2,000% on that trade, just like Biogen, where calls went from $1.55 to $60. You're never going to make that type of money if you're not in it. And a lot of that stuff is going to happen in the biotech industry till about March of 2020. The markets are going to correct like a monster sometime in March of 2020. I'll talk about that tonight. Next stock, another great company, which is cheap. Trade Desk, a real mover too, moves $5, $10, $15, and it's looking good. It's same pattern. Still a, what is this? Jen, what pattern is this?
Head and
It's a
shoulders.
it's a, exactly, it's a very long-term chart. It's a weekly chart going back to 2017. A defined uptrend channel where the stock was moving almost 80 points. This is over multi-months, obviously, and then broke out on earnings. We were there on that day that the stock spiked up like 15, 20 points on the news. First of all, they had great earnings, and secondly, news came out that they are working with Amazon. They got an Amazon contract, and the stock just exploded higher, 284. We sold a bunch, we held a little, and then immediately the stock started selling off. So some hedge funds, basically, who was long the stock, maybe at 40, 50, 60 bucks, they're like, man, we just hit gold. I mean, of course, this is going back to April of 2018. They just hit gold. The stock hit almost 300, 280. They're like, boom, sell, out. They'll get in. Of course, they're getting in now, in my opinion. But that's a payday, right? For hedge funds who maybe they had 100,000 shares, they just made millions. So why not sell? So this weekly chart showed you that the stock was in a confirmed downtrend after that movement. And in between, you could trade it during the day. That's not a problem. And now it has now arrived where? What are these lines? First of all, what is this? That's your long multi-year uptrend channel. It still held that, so that's a big plus. It did the same thing here. So these are the points. If you buy some and hold them for a month or two, depending on market conditions, you're going to make a lot of money. A lot. All right. So my opinion is the company's still in great shape. Indicators are all pointing to a high probability, big fat move into earnings and after earnings. When do people get excited? When the stock's approaching 230, 240. By that time, they'll sell again, at least for a couple of days. So we get excited around here. Now, this is a multi-week chart, so each of these candles are 1 week. So a lot happens in it. Now, when you look at this here, this is still a head and shoulder. We're trading the patterns between the bearish moves. There is head. Now, here is what one needs to worry about, right? Where's the bearish case on this? What is the bearish case? What is this pattern called? Jen, or if any one of you know the answer, what is this pattern called? Because that's exactly. Yes, exactly. You're right, ma'am. It's a bear flag. So on the bear flag side, yes, the stock can climb to 210, to, even can climb up to 220, because we've been buying the 220s and they move nicely. It takes some profits, but it's still a bear flag. That means that if it can't bust a move hard on a weekly basis over 220, 230, which is the right shoulder, if it breaks the right shoulder, the stock's going up. It'll go to 260, 280. It's going to make a new high. Maybe, but technically speaking, but still a bear flag. Now, you can still trade a bear flag. Yeah, you can trade a bear flag. Either way, you have to be quick, reasonably quick. Either it's going to break up, or bear flags generally break down. Now, what will determine, and this is a question for Sai and Paul, and you also can answer, Jen, what will, looking at the weekly chart on this, I can see the positive. It's holding the long multi-year uptrend channel. The moving averages are still moving higher despite the pullback in the stock, right? 50, 34 that I use consistently. The blue line is the 20-week moving average here. So all those are fine. I have arrows there. What will give me an idea as to whether or not it's going to break out over the bear flag? What are the chances of doing that? Or it'll come down. What is one of the simplest indicators you can look at that you're looking at the screen? Sai. Sai, you there?
Sorry, I was talking in the mute.
Okay, so
Maybe
let me ask.
see the MACD indicator or the
Yeah,
stochastic.
stochastics. Exactly. Exactly. You don't need to be a rocket scientist. If you like a company and you want to hold it slightly for longer, these things crossing over, like it's about to cross. You can see that right there. And the MACD, I can see, this is not a live chart, but if I made the screen bigger, yeah, I can see that the MACD is starting to shrink, the histograms. So both are telling me the McLaren oscillator is very nicely moving higher. All these things are telling me that from a swing trading perspective, the stock will break out. Most probably will break out over this bear flag. That means over 220, 230. Pretty simple. Doesn't have to be a rocket scientist to figure out. Paul, you with us on this, right?
Yes.
Exactly. Remember, if you use too many indicators, you're going to lose a trade because you don't want to. I use 14 roughly. I show some of them. Some of them are proprietary. I keep an eye on them. So if you, for all of you guys, just stick to the basic. The stochastics is the best one for fast traders and slow traders. So, and the MACD is great, but you know how to read them. It's not hard, and the market will throw a curveball during the week because the markets do that. Down 300, all of a sudden the stock will be down 15. But the longer term picture is telling me that the stock is about to break out. Next stock, which is a completely speculative stock, is ENDP. Now, anyone know what this company is? And why this, it's for a cheap play, like it moves 20%, 30%, down 10%. What is this company? Jen, it's in your field. Anyone know? Endo International?
Healthcare company.
Yeah, but it's in the news big time with a lot of other healthcare companies. What happened over the past 10 days, which is very monumental to American healthcare industry?
Oh, is this the stock you're talking about, Alzheimer's test? Or?
No. So,
Okay.
Jen, are you with us?
Yes, I am.
What was one of the biggest things that happened over the past 10 days in your field? All right, I'm not going to waste time. All right, I'm not going to waste time. The opiate settlement, the whole thing, the multi-billion-dollar settlement by the Justice Department against companies which, the painkillers, the opioids, whatever. You guys obviously were sleeping and not, you don't know what's going on in the world. That's fine. The settlement between all these big pharmas, Teva Pharmaceutical, this is one of the other ones. Even Johnson & Johnson, people who made all those painkillers, the opiate settlement. Everyone with me so far? Where
Yes.
large companies settled with the US finally, and they're going to pay about 18 to, God knows, $30 billion as settlement, class action lawsuit for pushing painkillers through doctors and everything. So this company is one of them. The stock was a $30 stock. So this is a speculative stock. You guys can buy some common or just trade those options. This is what the options look like. This is an options chart. This is ENDP November 15th, 5 calls. Initial trade, these are the points that, kind of we entered. 20, 30 cents. It went to almost $1. You buy something at 20 cents, goes to $1. That's 400% ROI. My average cost now is around 40 cents. I believe it goes to $1.40. That's 300% on your money. Nothing that difficult to understand. This is Boeing, very clean cut long-term chart. I'm very bullish on Boeing, as you know. And net, I've been right about 7 out of 10 times on big time Boeing trades. This is a very clean looking chart. You want to buy Boeing and hold it, then this is the chart you need to follow. It's a weekly chart. See the pattern? It's a clean trading range with Fibonacci retracements on top. 50% Fibonacci is 369.08, and that's pretty much where the stock went. In fact, went higher to a 380 before the sell. Next stock, the market. Where is? So this is now, we are into Wednesday now, the 24th. Are we into 24th? No, we are, this is still Monday. All right. Biogen. This is Tuesday morning. A huge lottery ticket gift is given to us because we bought Biogen on earnings. But Biogen comes out with Alzheimer's and says they're reintroducing one of their biggest trials that put the stock, which didn't work the first time, and second time they're saying it's working. So I told people to buy the stock here. I just bought a few calls. Oh my Lord, wouldn't you like to have some of them? Okay, so this is Biogen. This is when they halted the trials back in April. Are you guys with me so far?
Yes.
Okay, so this is when they halted their trials. Then the stock basically stuck between 215 and 250. Not a bad trading range, but basically did nothing. And then see you later. Earnings were strong, but the real reason why it went up was reintroduction of the thing. So the calls went from $1.55 to 60 plus. And this was a chart that was drawn weeks ago. Did I predict it was going to happen? No, I didn't. But at least I was in the trade. I told you guys to buy it. So bottom line is that it's very simple. The stock will go to 320, 330, the same breakdown level that in April. So that means you still have, I believe Biogen closed down Friday at 285. So it closed here. See this long downtrend line? So the stock, I sold here. And then I bought back a few calls, the 320 calls, which down on, didn't matter because the first win was so big. So, you just play with a little bit of the profits. And then the stock pulled back to 285. See this downtrend line? There you go. So this is a bounce point, in my opinion. This is the point where the stock basically will jump again. So you guys, if you missed it here, okay, understood. Now you have another chance. And if you look at Biogen's chart, this is the live chart. There, okay? So this is what happened. 220 to 320. I thought I was, I'm like, I thought it was a buyout when I first saw it early in the morning. I'm like, wow, because what stock goes up $100 unless it's a buyout? And they're like, oh, Alzheimer's stuff. I'm like, wow. And remember, Biogen's a serious monster. I mean, this is one of the biggest components of the biotech index and IBB. So, guys, this is what happened. And then this is where it closed at on Friday. What is this pattern? Psi.
I'm not sure, but is it a bullish flag or something?
Yeah, it's a bull flag. Correct. It is a bull flag. The bull flag looks like this. These are the most powerful ones, or sideways. So this one is this. Okay, it's a bull flag, correct. So what does a bull flag do? It allows you to second chance to get in. And its chart is very clear. The level where 280, it must hold around 280. And then this is 290, this is 300, this is 310, this is 320. I think the stock's a buy, and that's the reason why I said buy the 320 calls going into November and see, and you can make some money. Now, if it breaks below 280, it's no longer a bull flag. That's it. Next stock. Looking at, now we are going into, I'm skipping. I have a lot of charts, obviously, and I was on that. Yeah, go ahead.
Yeah, after a bull flag, what
Yeah.
is the next, like, if it breaks the 320, then it will be a continuous high, or
Yes.
how it?
So that's a good question. So let's take a look where the stock can go. Just like Tesla, which was a huge win. Okay. And like once the stock breaks out, so what happens? So let's take a look at for that, you have to look at the daily chart to start with. So this gives you the whole answer to your question, sir. So here was the stock before the announcement. Here is it. Some big selling came in, obviously, because the guys and the funds who were buying the stock in this range, why wouldn't they sell it up 100 points, right? So that's what they did. No big deal. Big volume, a big volume, profit taking, obviously. And now this is the daily, and now you can see them coming in and buying the stock again, right? Right there. That's what I was explaining. So in answer to your question, if you look at this chart that I have shown, you can see that once it breaks out over 220, it will fill the gap. The gap is here. One second. The gap. Sometimes I do this. I put it nice and thick and put it there. There. So 320 is your gap fill. That's pretty much where it went to. If it breaks above the gap, the next level of supports from a swing perspective come into 344. Then channels 327. So 344 is the answer. Now, is that an all-time high for the stock? I don't know. So let's see. Oh my God, this is exciting. Good that you asked the question. I haven't seen this chart in a long time, guys. This is where we are. Take these lines out. Kind of messy. So when people tell me sometimes, well, Frank, I don't have time to trade, I say, let's just stop giving me a, bag full of excuses. The only thing you don't have time for is you don't want to make money for yourself. These stocks don't need everyday management. This is a very bullish picture. Look at the volume for the week. Look at that. Unheard of. This was the sell. They all panicked, and this is on the news. You don't need to even you don't need the technical. Just look at it. This is good. This is certainly not overbought and moving higher. And the MACD is telling you buy now. There. It hasn't. The MACD will do this. The MACD stochastics will go over 0 and hit to its the 10 mark, which is basically severe overbought levels. Every time it does this, it sells. Okay, so now for swing traders, it's going to go up towards 10 and then it's going to try to bottom. So what does that mean? That means the first level of contact will be 350, possibly 380 to 400. Now this is going out a couple of weeks, if not a little bit more. And all-time high for the stock was 480. So bottom line is, this is a very, let me take this out, powerful swing chart on a real company which is about to embark on their next set of FDA trials. And this time they have a lot of confidence. That's why the big boys bought it. So if you want to look at it very simply, 350 is where the stock's going. It is a defined pattern. Now, in between, it'll zigzag a little bit, but this is where it's going. 350 and possibly 371 right there. Upper end of the range on that. Okay, Jen, did you get this? Did you understand this chart? You see the potential to
Yes,
make
I
some
did.
serious money? Exactly.
Yep.
Now, anything can change. There's always risk in the market. They might come and say, no, on second thought, we are not going to reintroduce the trials for Alzheimer's. It's a $1 trillion+ industry. Alzheimer's, for God's sake. America is getting older. We are an aging nation. How many people get Alzheimer's? A lot of people. Very sad disease. So on the weekly, this doesn't matter. Oh, come on. What am I doing wrong here? I don't want the cursor. There. Now it's cleaner. So do you see the picture, Sai, in answer to your question, where it can go?
Yes.
Very easy to read. So these are good long-term charts. You can buy one call like out there into January, into February. I'm going to check and see when they're reintroducing a tile. I believe it's January 2020.
Okay.
So it's a very, very good-looking chart. Another one where we're going to end off is Jen's favorite. I know you're doing well on that, and you better keep on with it. Is this another great biotech company? Immune Therapeutics. Peanut allergy. A pretty severe life-threatening disease. Kids, adults got peanut allergy? Yeah, they do. Jen?
Sure they do. Yeah.
Okay. So serious business. So here's your weekly chart. It's clear as day. The stock is here, by the way. It's broken out. It's broken out, and those calls are going. They don't move like 300%, but they're going. They move like 100%, 150. So that was the weekly. So now look at the weekly. I'm going to show that tonight. It is attacking that downtrend line with force. Look at the size of that candle. 25 to 29, $2. All buyers. MACD exploding. What's the next move? Well, we're hoping it breaks out powerfully over this big downtrend line. Constant call buying. The Najarian brothers come out this week and say, oh, this AMT, they're buying the crap out of the December 30 calls. We had the 25 calls, November, which we sold for for what, 150%, something like that. And then we rolled up. The options move slower. There you go. Okay,
Frank,
make it quick. Yeah.
Yeah. So regarding the stock price movement, we see the technical charts and that's fine.
Yep.
But for options,
Mhm.
as we do options trading, we
Mhm.
also need to see the volume in the particular option, right?
Not always.
For suppose
If you see a detection and volume in that option, it helps, but it doesn't have to be. The options will move based on the price, regardless of volume.
yes.
Mhm.
For suppose if we see the GameStop options,
Mhm.
it reaches to 0.25, but when we keep on sell, it won't sell at that price because
I
of
know.
the
That's
volume.
that's not just yes, I understand what you're saying. That has also to do with the fact that it's a cheap stock. In other words, it's a stock which is this is a fantastic looking chart. Look at that. Every single week, other than 1 week on 7th of October, that the buyers didn't step in. The thing with options trading is, as you correctly pointed out, some options will be more liquid. In other words, you'll be able to sell and buy quickly, and the spread in between the bid and ask is not crazy. And there'll be many stocks, especially biotech stocks, where you'll be like, what the hell? I say it. The options trading at 4, and if you want to buy it, it's at 7. You got to play in the middle. Now, why does that happen? That has to do with the market makers. That has to do with the liquidity. And it's just something we can't control. The ones which are the best, fastest options, where you get the best sell price and the price, are primarily the SPYs, Apple, Netflix, those type of things, where the bid and ask is very narrow. Did you guys understand that?
Yes.
Yeah. So yes, there's nothing we can do in this particular case. Sometimes it's showing, in the case of GameStop, because it's such a what we call extreme lottos, it'll show 7 cents, and then if you want to buy it, it'll show 25 cents. Correct? So what you
Yes.
do is you test the water. That's what I do. I test the water. I'll put it up towards 11 cents and see if they take it. And you'll see, boom, most of the times they won't. They'll move the bid up to 11 cents. Then I push it up to 12 cents. Because I'm not
Okay.
going to buy it at 25 cents. That's a fake number they put up there. You know what I'm saying? So I
Yeah.
want to buy in cost average. So I test the water with 1 or 2 calls. That's like $11 just to see where they're going to bite. And that's the trick to do it. You test out what the machines as well as the human market makers of that particular stock are willing to give you if you're looking to buy it. If you're looking to sell it, it becomes trickier, because if the bid and ask is that wide, I excuse my French, I call them the bastards, because it's complete highway robbery. They'll give you the worst price when you're trying to sell it. So what if I do when I have sold my GameStop, like, sometimes when it moves higher, I sell it on when it's moving really fast. In other words, it's at 19, 20, 25 cents. I'll put it out there and they'll take it, because that means there's buying coming in. So let me sell it to the guys who are coming in late. You got it?
Yeah.
Exactly. All right.
Maybe this is a good stock to buy the stock instead of the options, right?
No, no.
No. Is it?
We've made 500% on this option. So what's the
Yeah.
problem? Why am I going to make 40% on the stock and lock in a lot of money? I own the stock too. But in order for
Yeah.
me to look, if somebody owns 100 calls, that means they own 10,000. They own 10,000 shares, right?
Yes.
Yes. So if I can own 10,000 shares of the stock, and if I wanted to just buy the stock, it's a $60,000, $65,000. Okay, on margin, it's $33,000. Why should I lock in $33,000? It doesn't
Yeah.
make any sense to me. And so why not buy the cheap lottos and let the stock go higher? And the lottos will be able to sell it for $1. When I told people to buy it one day, a couple of weeks ago around here, it was 4 cents. And we sold it at 24. That's 500% on your money. So it all depends on what you want to do. I just think that buying these calls is like, serious stuff. But these are as the stock moves higher, your calls are going. This is the answer to your question. Will become more liquid, because there'll be more participants buying those calls, because all of a sudden they're getting excited. But we got excited a long time ago. Not at 3. We got excited around 4.5, 4.7, and very nice. So that's it. Paul, any questions?
I was just wondering, Frank, if you could just provide a little bit more insight on why you think the market might go down in March.
No, I'm not going to provide that on this session.
Okay.
All right.
Okay.
I'm going to be providing that very much so on the weekly strategic webinar that's at Sunday, 8:30 p.m. Eastern Standard Time.
Perfect.
Yeah. And I gave you a glimpse of why the market will go higher short term, just earlier on the charts, on the E-mini charts. We're going to go to 30.50. So that right there was a technical thing. I'll be going more in detail. And seasonality also counts, just so you keep that in mind, Paul. Seasonality counts. Earnings are coming in strong. These are all reasons for the market to go higher. Even companies like Caterpillar that got hit really hard after they came out with earnings turned around and killed the shorts. This was Caterpillar. I mean, we bought those reversal calls. I wish I'd held most of them. You'd have been a 1,000% gainer. See, this is when the market's telling you, F you, we don't care, the China deal's getting worked out. Look at this, the stock collapsed after earnings. That collapsed. Right there. It went from, what was the earnings? Can't remember. Yeah, yeah. So Caterpillar went from 133 down to 124 after hours. Like, hello. And then turned around. We had the calls, I think at 2 something. I said, buy this baby. Just ramped. It ramped the next day. This was pre-market Wednesday. And look where Caterpillar ended up, 140. So if anyone wants to know, and this is a company in the crosshairs of the international trade war with China. So this is why the market's going, because these are Dow Jones Industrial Average monsters. Caterpillar did that. Costco did that. Who was the other one? This turned around, just went nuts. I'm like, oh my Lord. I forget. This is what happens, guys. The market is anticipating better situations going forward, while 99% of traders, especially retail traders and institutional analysts, are bearish on the market. So what gives? Higher markets. Nobody's excited about the market. I told you guys earlier on, everyone's playing defense. Everybody. Look at you, Paul. You call the market pretty well. You're playing defense. So I'm bullish. I'm playing defense. I'm not even going hog wild. I probably bring him, $500,000 if I went offensive in 1 month, in a couple of weeks. There you go. That's behavioral sentiment. Okay, not right now. All these questions, I got to go. This is 11:25. All right. So I will, do all the stocks and stuff tonight, Paul. He typed in AT&T, which I'm very bullish on. Their earnings are coming out on Monday, so there's going to be volatility pre-market. Keeping fingers crossed. If it drops, I'm buying it because Elliott Management is in it. That's it. And if anyone wants to know who Elliott Management is, Paul Singer, please Google it. When that guy puts his money, you want to buy, period. Because he's not in there for pennies. Have a great morning. See you guys at the 8:30 p.m. session tonight. It's going to be very important. Talking about markets, couple of stocks, and the overall couple of other important indicators I'm going to show, including the 10-year government bond yield, which is fueling the rally. See you guys later. Thanks for attending. And please get lots of referrals and just make it happen. Good afternoon. Bye-bye.